Hi folks, good evening. So we're going to be doing a review on British Pound. I'm going to teach you a little bit about high impact news drivers and how you can practice with them after the news release. Okay, it's not an invitation for you to trade ahead of them. And what is a high impact news event? Something like interest rate, FOMC related like it was today. And I'll give you some details about reclaimed order blocks. Alright, so we're looking at the British Pound. This is our daily chart, and as I mentioned previously that we would probably run above this high here. We did a very shallow run above that. I think we'll probably press a little bit deeper into that over the night. And again, if we accelerate, keep your eye up here. I just don't have it highlighted, but you know that was highlighted in the previous discussion with British Pound. Alright, on the hourly chart, you can see here, very large market maker buy model. This is that relative equal low on a daily chart. It swept through that. Smart money reversal, low risk buy, accumulation, reaccumulation, multiple levels of reaccumulation, which brings us to this area right here. We had this buy side imbalance, sell side inefficiency. Now, again, we don't teach Chris Lurie's fill in liquidity voids and one and done theory. And that's not to be disrespectful or rude or arrogant. It's just to differentiate what it is that I teach you and what everybody else thinks they're learning. So the buy side imbalance, sell side inefficiency, we split that in half. That's consequent encroachment. So did we at this time, at this high or this high, did we trade above these relative equal highs and attack the buy side liquidity resting above the original consolidation it's seen here? No, we did not. So is it likely to come all the way back down into this level here where resistance broken becomes support? No, that's retail logic. We take this area here and we draw that out in time. Okay, so that way we know that's a potential area where price could gravitate to and rebound. But we'll talk about that when we drop into lower time frames. And here's that buy side imbalance, sell side inefficiency, consequent encroachment, overlapping with the 138 mid-figure 50 level. Notice that the bodies of the candles respecting that. You don't get that in baby pips. So if you see how prices drop down, we accumulated around the consequent encroachment level. The algorithm repriced higher. And then right here, notice what it's doing. It's dropping down at 2 o'clock in the afternoon, Eastern Time, to clear this low. So anything inside of this area here that would have been deemed bullish, and those individuals that were riding that long ahead of the news, got stopped out. And then it hit our target, which is that old high. So the institutional levels here also notice that we worked around the 80, back down to the 50, swept the low on FOMC, then came back up and hit the 139.10 level. Zooming in here on the 15-minute time frame, let's get a little bit more detail here. The buys of the candles hitting consequent encroachment. Yes, we have tails on these two candles that go a little bit beyond that, but that's fine. It's not a deal breaker. We're seeing it come back down in consequent encroachment, and it's better to leave this portion open because this makes it a breakaway gap. All right, so we're looking at the 5-minute chart here. And I want you to look at how we traded down into that consequent encroachment here. And as it trades down into that, the bodies of the candles respecting that level, even on the lower time frame 5-minute chart. Yes, we have these little tails, which is errant price action. In other words, we're allowing for that, okay? This is what I'm referring to. If you try to fancy dance in the wrong times and wrong levels, 2-pip stop losses will not save you. Okay, so don't try to feel like you have to be that nimble. Notice what we have over here. Relative equal highs, so you know what is sitting right above that. Buy side liquidity. So they're taking it down ahead of FOMC, but they're doing it early on. Now I want you to think about what's happening here. We have FOMC at 2 o'clock. The underlying market's bullish, and we're expecting the market to reach up into this 139.10 level. We have buy side liquidity here and here on the higher time frame. It's dropping down ahead of FOMC to a level that we anticipate as support. We look for this level to be traded to. And then what happens? The market rallies, creates an imbalance in here, trades back down into the imbalance and order block. Does it capitalize that order block and rally? Yes. Comes back up, trades back down in, small little fair value gap right there. Institutional order flow entry drill there. Rallies again. Runs up higher, and then what happens? It drops on FOMC. At 2 o'clock, it takes it lower. So now go back into this area here. What's occurring? The market's turning, and it creates a bullish order block. But if we go up to the 15-minute time frame, this order block right here, this down close candle, this was the order block that was established at the consequent encroachment. Then we have this wick that trades through it and takes out that low. Do we just forget about that order block? No. What have I been teaching you? What was the theme of this week? Reclaimed order blocks. So now we can take this level here, carry that out in time, and inside this range, this order block will be significant again. Right here on this candle, as it's trading down, and it comes back in and trades into it one more time, lower, I went long on the order block, and if you look at the range here, you strip all this stuff away, and I want you to look at the close of this candle here and the low. Measure that with your fib, and here's the halfway point. So consequent encroachment of this wick, because we treat wicks like a gap. That's 1.38589 tenths of a pip. So look over here. What is this? That's an order block as well. So inside of this range, of this big wick here, midpoint is here, go to the left, and what do you see? An order block. So we're seeing price trade down into this again, but on a lower time frame 1 minute chart. And I'll show you what that looks like in a moment. But for now, the logic of why I was entering, after initially it ran out the low and then it started trading back down, that's what I'm buying. I'm buying the order block, the consequent encroachment, and I'm trusting the fact that we've already taken out the low here. So that was the initial event at FOMC. So you always wait for it to deliver whatever it's going to do. If it takes stops right away, then you can practice runs on liquidity like I did today. Not that I'm trying to make a lot of money, not that I'm trying to risk real funds on it, okay, but it teaches you to read the tape and know what the market's likely to do. So if you're practicing in these high volatility events like this, when you're trading on normal volatility, you're going to trade like a rock star. So this order block here is converging with essentially the consequent encroachment. And if we looked at this low to high, we are below the low to high. Midpoint would be in here. So equilibrium, we're below that, we're at a discount. This candle here, wick, it's a stop run, we ignore it in one sense, but we also use it for range. Order block, consequent encroachment of that, so we're overlapping with multiple things here. I'm trusting that the stops have been taken on this low here, because it really quickly dropped down, took them all out, and we hadn't taken this high out yet, and we hadn't taken out these relative equal highs yet. So this was the manipulation. So now I can trust this order block, and the 15-minute time frame reclaimed bullish order block. All right, it's dropped down into a 1-minute chart. You can see that 5-minute bullish order block line here. And this little tiny little arrow right there is the candle I'm entering, and the price you can see here is at 138.65 and 3. Right, so it's this candle right there. Okay, so it's as it's trading down into the order block, and it's inside of the big wick on that 5-minute candle. I'm going long there and trusting that the low has already been formed as FOMC releases. Market rallies up on this candle's high. I'm taking my first partial, which is the first run above those relative equal highs, but not the higher time frame buy side liquidity pool. Okay, this is just running above those relative equal highs on the lower time frame. That's first partial, and I missed out on the high candle. Let me tell you something. When I see this here, okay, and this candle and the exit is not on the high, and when I see that I'm exiting on the candle after the high candle, that's like a miss for me. So I'm not trying to tell you to think negative like this, but these are the things that plague me in my exit strategies, because I'm looking for perfection. And I don't want you to think perfection is something that you should strive for and expect, but always aim for improvement. But the destination of perfection is not going to be had. Not in trading, it won't be. But nonetheless, as it ran above that 139.10 level, I tried to get in it and exit as it did that, but it was the 1-minute candle here that I was exiting at. So just fell short of the 139.10 level. I was trying to get it as it spiked up above it, but I couldn't get that. So it's a little off there. And there's a small portion of the trade running still, and the stop you can see here is at 1.3868 and 2. And again, you can see the arrows where I bought, partial, and then the balance is here. And you can see all the details down here as well. And that's going to be it. I'm going to catch up with you guys by way of tomorrow's YouTube video and our mentorship video. I'm tired today, so there won't be an installment tonight for YouTube. So this is going to be it. So I'm going to try to get some rest, and I'll catch up with you tomorrow. Until I talk to you then, be safe.